Welcome back to the channel, guys, for the 8th month this year. We'll get straight into it with a bit of a lowdown on the month's performance and then get into what each stock paid straight after that. So although we still ended up netting 24.69% more in income when compared to August 2022, it was still in my mind a little bit disappointing of a month, as after this month's result, we are way off the average $208 New Zealand dollars needed each month to get to our goal of 2,400 New Zealand dollars in total dividends paid for the year. I always knew August would be similar to May in terms of not netting massive dividends due to its historical performance, but as this month's total dividends came under 100 New Zealand dollars, it now puts massive pressure on the portfolio to now generate an average of $360 per month to reach that goal. December will always net a larger amount than any other month, but I'm hopeful September and October will take a bit of pressure off September by providing incomes close to that 200 New Zealand dollar mark. I'll delve deeper into the reasons behind August's bad performance later in the video, but for the meantime, let's get into the meat and potatoes of it and let you know who'd pay what for the month just been. Bernstein paid the third of its 4 quarterly payments to the portfolio of 4 New Zealand dollars and 96 cents, which brings the total amount paid by the company for this year to 15 New Zealand dollars and 64 cents. Since its last payment in May, the stock has decreased in capital value by nearly 20%, which is interesting after they've had an increase in revenue between Q2 of 2023 and Q2 of 2022 by 3.8%. What I believe has happened is that during that time, the operating margin has increased from 20.1% in Q1 of 2023 to 18.4% of Q2 in 2023. There may have been some investors scared off and out of the fund, which has caused that reduction in share price. AB continues on its positive trend of being able to increase their assets under management, which is just $676 billion in May and has now risen to $704 billion in August, which reflects a massive 4.1% increase in a very short time. This increase was the cause of market-wide appreciation, offset by firm-wide outflows, which is nothing but positive for the fund. What AB really needs to focus on now is reducing its rising operating costs, which is currently killing its return on equity that is currently sitting below the industry average. The industry itself has a negative 3.5% decline compared to AB's negative 27.2% decline in the past 6 months. It's slightly concerning to see that over the past 3 months, 2 insiders, Mark Manley, the Senior VP, and Carl Sproles, the Chief Operating Officer, have sold off a combined total of $3,188,649 US dollars, or 83,000 shares. If a company was expected to do well in the market conditions, you wouldn't usually see insiders selling off large amounts of their holdings like that. I still do believe AB is a good purchase as their current health is strong and their revenue rate is sitting at 52.6%. In saying that though, like I said, it is slightly concerning to see insiders having sold such large part of their holdings, but it's hard to have a direct reason as to why this was the case. It could have not been an insidious reason and instead an aim of reducing the share price to get public more interested in the stock itself and to buy more than what they sold off in the first place. We then had another monthly payment from AGNC, who paid 3 New Zealand dollars and 29 cents, which is now bringing the total paid for the year to 17 New Zealand dollars and 68 cents. According to Simply Wall Street, the stock is well below its fair price of around 30 US dollars, which is slightly contradictory at this point in time, as their book value is a lot lower than that stated figure. Yes, the fair value is an estimation of the future value of assets, but I currently think it's a slight overestimate. As I stated last month, I do have high hopes for the stock that when the yield curve on the long-term and short-term lending inverts, it'll start to generate large profits for the company due to the majority of their assets being in high-yielding long-term assets. Not much has happened with the stock over the past month, with it dropping 4%. For the year to date, it has dropped 4.25%. My investment itself has done even worse thus far, currently boasting a negative 15.6% loss. This is due mostly to Emirates over the past year battling high defaults caused by rising interest rates, which have also affected the ability of AGNC to leverage their method of essentially interest rate arbitrage. As always, I'll continue to hold on to the stock and look forward to another monthly dividend next month. BlackRock then paid out 2 New Zealand dollars and 19 cents, which brings the total to 14 New Zealand dollars and 78 cents for the year to date. As stated last month, with their assets under management increasing, I expect we might see a dividend increase occur in the next 6 to 9 months. Other than that, their share price has risen 18.93% since the start of the year, which makes it one of the better performing monthly payers in my portfolio. My position hasn't done as well as I've liked it to, after buying large amounts in 2021 and 2022 when the price was between 54 US dollars and 41 US dollars. The price is now currently sitting at 33.65 US dollars. It does seem though that the stock has bottomed out, so the only way forward now. Yeah. We then had had EFC, who paid out $5.83, which brings the total paid for the year to $38.13. Quarter 2 earnings have now been posted. There's been a couple of highlights, such as their residential mortgage-backed security yields increasing by 8% to just shy of $1 billion at $918.5 million. They've managed to acquire 2 new public mortgage REITs, Ellington Investment Corp and Great Ajax Corp, which will substantially increase their capital base. Book value per share is also at $14.7 per share, which is currently higher than their price of $13.37 as of August 31st, which means that it's currently trading at a slight discount. I'm hopeful its share price might drop even more over the last month to provide us with even greater discount. Happy with the monthly performance of the stock, and I'll continue to reinvest the dividend. ETY then paid out $2.88, which brings the total paid to $13.31. That stock itself for the month of August hasn't moved much, increasing only by 0.33%. More importantly though, the dividend has returned to its 8 US cent per share after halving and then quartering in value between May and July. Although according to Simply Wall Street, they have no debt, it's hard to see if they were withholding dividends to use to purchase greater amounts of shares in the companies and funds they own. I don't believe it's due to financial hardship, as their top 10 holdings are all strong performers who themselves have been performing relatively well over the past few months. For example, Microsoft has continued to increase its dividend and increase their capital value, and stocks like Meta have recovered greatly since their slump at the tail end of 2022. What probably occurred, and is behind the dividend decrease, is that all the call options they wrote on the S&P 500 may have not generated as much growth as they thought, meaning that the premiums they paid may have outweighed any potential profits they could have made on that call. Analysts currently see the stock as being overvalued, which I put down to its negative earning per share rate and low return on equity, which is why I'll be investing its dividend into other stocks when I start to see it represent more of a fair value. Horizon paid out $10.43, represents a slight increase to last month due to reinvesting the dividend. The total paid out by Horizon now sits at $72.96. As I said last month, their monthly DPS for the rest of the year will also stay at 11 US cents per share. Their variable rate loans have continued to benefit from the high interest rates and will continue to do so as long as the Fed keeps increasing its average interest rate for what banks have to pay. The fundamentals of Horizon are too good to ignore. It continues to beat earning estimates and has outpaced its financial peers all over the BDC world. I'll continue to reinvest the dividend from the stock for the foreseeable future. We then had JPY, who paid out $1.14, which brings the total paid by the stock after owning it for just 2 months to $4.26. As stated, the stock generates income by selling call options on large cap US stocks. The decrease in dividends paid out this month in comparison to July indicates that managers at the fund got part of their options incorrect. I'm hopeful that analysts will get their call options right in September and payments will come close to that $3 New Zealand payout that we're used to seeing. Prospect Capital then paid out $19.22 New Zealand, which brings the yearly total to $141.32 New Zealand. We've continued to reinvest part of this dividend back into Prospect Capital and the rest into other BDCs such as TSLX. One BDC that has caught my eye, as I said before, is Capital Southwest Corporation, and I'm hopeful that more of the income from Prospect Capital will start to go into that business, but I'll need to conduct some more analysis in the meantime before investing. QLD then paid out $2.89 New Zealand, which has now brought the total income for this fund $21.57 New Zealand. Nothing worth mentioning has happened with this stock over the past month. Income from this fund has been used to buy more stock of JPY, just due to the fact that I see more promise of JPY in terms of capital growth when compared to QILD. Rithm Capital then paid $7.64 New Zealand, bringing the total to $22.52 New Zealand. Since the company's drop in share price due to COVID, they've been able to grow their share price value by 208%. Although the price is still not at pre-COVID levels, they've been able to keep consistent dividends, which has grown from 20 US cents per share to 25 US cents per share. They are making a healthy profit of around 28.6% and have an earnings per share ratio of 1.31, which is great as far as REITs go. I'll completely agree with their future stock price valuation of around 16.95 US cents per share, which is close to double their current price. This is due mostly to their dividend growth since their drop, great profit margins, acceptable earnings payout of around 75%, and then coverage on their debt payments over the short term. What I am hesitant on is that currently their debt to earnings ratio is way too high for my liking. At their lowest share price point, their debt to equity ratio was 467.1%. They've since managed to reduce price is back down to 328.4%, but I'd like to see at least another 100% knocked off that number to give me some confidence that they are generating enough profit to be able to pay down their debts and therefore provide security that they are a highly profitable and somewhat safe company. Our largest payment of the month came from Southern Copper Corporation with a dividend of 23 New Zealand dollars and 26 cents, bringing the total paid for the year to 67 New Zealand dollars and 1 cent. With one more of their quarterly payments remaining, I expect we'll reach just under 100 New Zealand dollars for the year. We talked about it briefly last payment, but the price of copper has continued to rise with the world's sudden increase in need for electric cars, partnered with the consistent need for electronics, which copper plays a major part in making possible due to it being a key element in semiconductors. Although Peru, who is a major producer of copper, has continued to endure riots from ethnic groups who have either been unfairly compensated for leasing their land to mining conglomerates or not paid at all, has not seemed to yet slow down the production or taken away enough money out of the mining companies' purses for compensation to affect the dividend, which is great for us investors in an unfair way. As we can see, the dividend has experienced a positive upwards trend, and I expect this to continue in the sudden and fairly near future, hence why I see this as a great bet for my portfolio. We then had another monthly payment from STAG, paid 3 New Zealand dollars and 86 cents, bringing the total to 29 New Zealand dollars and 30 cents. Again, not much has happened since our last update, but it's great to see that monthly consistent dividend continue to roll in. So in summary, although for this month we incurred 15 payments compared to only 11 last month, we still only netted 87 New Zealand dollars and 57 cents. This is 25% more than August of 2022, but still way off the $200 New Zealand average required to get to our goal of 2,400 New Zealand dollars in dividends for the year. To get to this goal, we now require close to 360 New Zealand dollars per month, and we should definitely be able to generate that much in the month of December, but I'm doubtful that we'll get close to that figure in the month of October and November based off the previous results. Portfolio now sits at 66.5k after capital gains is included. Portfolio's dividend yield dropped slightly this time and is back down to 5.56% overall. Looking forward to September, we should expect to see some payments from ABR, CCI and Heartland, which those three in itself should net over 150 New Zealand dollars. As always, thanks for watching guys. Hope you have a great week and we'll catch you on the next one.